The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another excellent edition of the Power Trading Hour with David White, your humble and lovable host. What we are celebrating today is the day that Harry Truman was actually told of the Manhattan Project and that we had an atomic bomb that was going to be ready very shortly. I grew up from I was about 11 to I guess I was there till about 28. And in that area in Independence, Missouri, by his home. But he was kind of an interesting guy. Of course, he sold hats in downtown Kansas City, became part of the big Pendergast gang. It's kind of the equivalent of Tammany Hall or the Machine, as they call it, in downtown Chicago. The mob was incredibly active and was all the way through the mid-'80s in Kansas City. If you ever watched the movie Casino, there's several people in downtown Kansas City where they show the FBI wiretapping this guy that owns a meat store, a butcher store, traveling back and forth to Las Vegas and picking up suitcases of money and then dropping dead. I met that guy several times, actually, at a restaurant in downtown Kansas City, one of the finest Italian restaurants in the nation. All the mobsters, at that time, the Sevilla family was running the mob and basically all of Las Vegas out of Kansas City. And they would basically hire the best chefs they could get out of Italy and Sicily and ship them over for as long as they could before their visas ran out. And it was probably one of the best restaurants in the world. I don't know if it's still there. It was called the Italian Gardens. Anyway, I think I was probably 14 or 15, and one of my friend's dad loved to go down there on Saturday nights, and he dragged me down there with him. Of course, the food was fantastic, but he was in the newspaper business and would introduce me to these guys later that I would see show up in trunks and buried out in fields and other things. But these guys were pretty big mobsters, and basically almost at their height. I guess I got to bump into them as a kid. Of course, they didn't pay any attention to me, and I really didn't have a lot of concept of what these guys were, other than they were bad dudes that kind of smelled a little bit and drank a lot and ate a lot, and most of them were kind of fat. And then, of course, years later, in the mid-'80s, I was on a grand jury. The first year, they put me on the county grand jury, and then later, because of a problem that I had with one of the police officers who didn't quite like us looking into his business, they moved me over into the federal grand jury system, and I ended up seeing some of these guys that I'd seen 10 years later or earlier at that restaurant show up before us in the grand jury, eventually get indicted. But kind of interesting, a lot of that part, especially that part in movie Casino where they're actually doing it. But anyway, most people don't know Truman was kind of one mobbed up and certainly part of the organization. It was called the Pendergast movement, and he kind of got pulled out of oblivion of selling hats and put into running the first city, then the state, and later on being a vice president. But we used to go in Kansas City you go down to a concert, and it wasn't in a park. It was in what they called Brush Creek. It was a creek that was probably, I'd say 99% of the time, 6 inches wide, but they had put in a huge retaining system for this thing that ran several miles, and it could have been hit by a nuclear bomb and not even move because it was like 4 feet thick. It needed to be about 6 inches thick, but it was one of those 1930s super boondoggle things right at the height of the stock market that the Pendergast people went through, and it was always a symbol of huge corruption that was in Kansas City at the time. But President Harry Truman had a decision that probably most of us are glad we will not have to ever make, and that is whether or not we're going to drop the atomic bomb. I think that it was probably the right decision. Sometimes there aren't good decisions, only bad and worse. Probably made the best thing and did the best thing that he could do at the time in a world that was weary of being at war. Kroll-Polar mobster Truman, didn't know that. I don't know how much he was a mobster. He certainly was in bed with all the mobsters. And if you look up, I think it's on maybe in Wikipedia, it's called the Pendergast Gang. He was pretty much in there. Very humble guy, though. As soon as he left the president, went back to his old house. He didn't run around doing speeches or tried to make money. So he was kind of an honest man, or at least as honest as he could be in a world that was fairly corrupt, especially in taxes. But from a humble hat salesman to a vice president and president of the United States, pretty much because the Pendergast gang pushed him all the way along, and the Tammany Hall group of Kansas City. But anyway, as we go along in the market, not a whole lot of movement. Up about 2 points on the S&P cash, 2.3 billion shares on the consolidated tape as we speak. What do we see out here? Just a whole lot of nothing. It looks like we're going to have lighter volume again, looking and trying to find any kind of stock to buy. It looks like we're actually foaming at the mouth, rabid to buy something. We must buy something. We've got to buy. But this market could flip on a dime. If you didn't catch it, I suspect that CNBC will chop it all up. But there's probably out of, the 60 hours on CNBC a week, there's probably 15 minutes of it generally that may actually be worth something. Today was probably a rare exception, and that was an interview with Jim Chanos. He did say a few things that were probably very interesting, but if you can go to the website and probably check it out, it was at the noon hour. He probably had more to say than anybody else that wasn't full of bovine excrement on that channel, and very interesting. Probably the biggest thing is if you want to go short, he is one of the best short sellers. He figures out and mostly does book work on stocks, and he had his theory on how they short. But he is vastly short China now and was going through all the problems that China has. Again, he's not going to be able to get much action by going on a show like that and saying short China. You've got to be basically an institutional investor to go do that. But he was basically talking about of the liquidity and free money that's been pumped in the system. You would be surprised to find out that over the last year, probably close to 80 to 85% of it has all been in China. That they are more than anything trying to keep the balloon afloat out there, and he's short everything from iron to copper, anything that looks like you would be a huge building or used in building over in Asia Pacific. Short companies that provide it, concrete companies, anybody, any kind of business in that area, and he's looking for a huge move down. Again, famous for figuring out Enron was a scam. Today, he came as close to calling Herbalife a scam. Not quite the level of Enron, but very close on that side. And it would be very interesting to see, very interesting to see how some of those things work out. But yeah, old school guy, very smart, very shrewd, and over the years, there's a lot of people that like Buffett. I figure about half of what he says is true and half what he says is self-serving. I have never found that Chanos said anything that would truly change how much he's going to earn. He's basically in it for the long haul. When he says he sold, he sold. When he said he's bought, he's bought. He both is a long and short, but mostly famous for Enron, the housing collapse. Maybe not as famous in the housing collapse as others, but has made a lot of money over the years by looking at very interesting companies and mostly their books. And he has a kind of an idea where he says basically if they can't continue to finance and have enough money coming in to finance the pyramid scheme of a funky company, then he's the one that is going to go out there and short it, and it's kind of interesting. Of course, everybody wanted to get into Apple's earnings, probably got into it. I think everything you need to know about Apple's earnings is covered by their margins. The average price of iPads has fallen from a year and a half ago from $680 to $450. So at 18 months, I think that was what it was, 18 or 20 months, they've gone from $680 to $450. A lot of that is the iPad minis, but if you actually look at a chart, it is a clear and decided move down. People are, at least in the United States, are not willing to pay the premium of double and maybe even more when you can go pick up a Amazon-branded Kindle and some brands of even Google's Nexus brand pads that they, for all practical purposes, are extremely good at what they do. The huge advantage of having an Apple iPad has long been over. What they didn't discuss, and no one asked in the earnings conference last night, is the 800-pound gorilla in the room, and that is how much longer are they going to be able to hold people, and that by people I mean the providers of cellular service over a barrel and continue to get that 680, 690 out of their iPhones. We'll be talking more about Apple in the next segment.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, as we look at Apple today, I'll get a current quote for you here. While I'm looking at it, it's at 407, which is up a buck from where it was yesterday. I suspect a lot of this is damage control for the big funds that own it. They want to keep this thing going sideways. My guess is that Apple, at least maybe through the end of the year, could be a dead money here. That means that we might not see more than 10% up or down from this price all the way through thick and thin. They are going to be buying $60 billion worth of stock. And it is a easy way to get around repatriating a lot of the money. Where it is overseas, they'll just buy the stock and put it in the bank vault and show it as an asset. But never having to repatriate that money means that they won't have to take the 35% hit. If someone was smart and wasn't really stuck on a socialist agenda, they'd probably figure out that we should probably cut the tax rate for corporations and bring that money back. It would be a huge windfall and probably not too bad. There are a few things out there that people are pushing on Apple. One is that they're going to start selling phones in China. China, especially China Telecom, is not willing to put up with Apple's demands. Of course, Apple had to make a giant apology. The CEO just a few days ago for a warranty issue, I don't suspect that's really about the warranty issue as much as making Mr. Case kiss the ring of the Chinese over there. They're not used to being dictated to by Americans and certainly don't like it. They've been able to keep Apple out of that market. China Telecom has a slightly different flavor of cellular service, not quite GSM and not quite LTE, and there is a special chip from Qualcomm coming that will allow one phone to actually work with every single provider out there. I'm not exactly sure when that's going to come. I bet we're probably going to get an answer to that tonight. Qualcomm does report after the bell, and that is going to be interesting. But my guess right now is there's a lot of CYA for Apple holders and big institutional guys, and they're going to want to keep this thing as flat as they can as they push Apple off to other people that are more interested in value investing and looking for that dividend and a steady stock price for a while. $60 billion will be enough. Of course, when you look at it, Apple has lost $300 billion worth of market cap from the $700 mark. What does that tell us about Apple's prospects? Well, from listening to the earnings call last night, we're looking for maybe a new iPhone that is a slightly warmed-over version of what's out there now. So maybe something evolutionary, not revolutionary. Any revolutionary products are going to come out next year. The stock was trading about $4.25 after hours when Steve Jobs basically said, hey, we're going to have something new before the end of the year and a lot of neat stuff next year, letting everybody know that the revolutionary stuff would not come in until at least the first quarter, if not later, of next year, and that's when the stock went back down to about $3.96. My guess is that people just won't be able to stand it. They know he's lying. He's sandbagging them yet again, and they'll want to buy this thing. Probably going to see this thing trade in a range of somewhere between, I'm going to say, $365 to probably $440 in the coming months, and that's going to be a huge effort to start pawning this stuff off to funds that are more interested in a dividend from Apple than the growth company it used to be. Now, maybe by the end of this year, it will become a growth company again, but as long as margins continue to fall, and probably the biggest problem would be a surprise, and that surprise would be somebody like AT&T saying, we're not going to pay $695 for that iPhone anymore. We'll pay you, $595. And that is going to be devastating for the margins on Apple. I don't see that happening in the next quarter, but the opportunity for these cellular providers to gain the upper hand like the Chinese have on Apple is a distinct possibility. But I don't see anything other than margin compressions going on for Apple, and we talked about this last September. And I had a special issue of the Tech Insider coming out showing just how bad the most of Apple's inline suppliers were having. Anyway, we'll be back in just a minute.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Baby, let me be your loving teddy bear. Put a chain around my neck and lead me anywhere. Let me be, oh, let him be your teddy bear.
And as we come back, last night as we went into earnings, there was about 75% of the, well, let me put it this way. So far, 30% of, about 10 o'clock this morning, 30% of companies reporting have reported in the S&P 500. Of those companies, 69% have beat on earnings, but only 39% have beat on revenues. What does that tell us? There's a lot of these companies that are pushing profits into this quarter to continue to make it look good. This is robbing Peter to pay Paul. It will come to fruition soon enough. You know, sometimes they can do this for a couple of quarters. I suspect that we're going to see a lot of this turn probably over the next 45 days. There's only so long that you can do this, and it gets on this in a bubble like this. A lot of people are thinking, well, the market's still moving up. It's still moving up. I've got to buy it. It's different this time. Well, it's never different. They can extend markets just like they did in 1929. They can make them huge, and eventually they do blow up in everybody's faces. The people that made the most amount of money were not the people continuing to push the bubble. It was Jesse Livermore who, within a few months after the top in the marketplace, was worth about $300 million in 1929. You can make money both being long and short. I would not be long here. If you don't want to be short, you certainly can, with the VIX at the level now, certainly play options as a way of being in the market, but at least limiting your risk. I would not be long equities now with your money. Buying at the top, of course, always interesting, certainly with the crowd, but every time that I've run into one of these, which has now been what? The crash of 87, or excuse me, not 87, of 98 on the long-term capital management, the dot-com blow-up, the housing market crash, what we've seen in Bitcoin here later. I've seen enough of bubbles to really believe that we are in a bubble. Now, can it still go higher? Can the people with the unending flood of money from the Fed still push market higher? I suspect, but if it goes higher, it's going to be very small. And one day we're going to open up and see the trapdoor fall pretty much like we saw yesterday. You cannot continue to put lipstick on this pig and expect everybody to come kiss it for very much longer with only, 40% actually meeting or beating the revenue numbers. It's just not going to happen. Is Netflix a fraud? I had somebody ask me that yesterday and email me. I spent a little time right before the show looking through the books and reading some articles of some accountants looking at it. Probably the most interesting thing is there is some funny accounting going on, and you can tell it by the free cash flow, and it's shrinking. Why they have huge moves in what they call new customers and new revenue. The free cash flow is not going along with that. So somewhere there's an expense, and of course the biggest problem I have with this company is that they are not telling you what the content cost is. That's like saying, well, we're going to make lots of money. Well, how much are you going to have to pay for steel next year? Doesn't matter. I'm not going to tell you. Whatever steel is, it's fine. We're going to make money no matter what. And if you watched, I think, PBS over the last week or so, you would have seen the gentleman that does all the long-form documentaries. He did the one on the Civil War and baseball. Basically, a lot of them. PBS is trying to make a deal so that you can watch those long-form documentaries on Netflix. And Netflix keeps coming back and offering them about a third of what they think that they should get. Ken Burns is his name. But I suspect we're going to see more and more of that push on the companies like Netflix, where, in Ken Burns' own words, what do? They click a button that says send. I'm not going to, and basically Ken Burns said, I'm not going to give you 2/3 of the cash that you make off this thing for clicking a button. He says it just doesn't float, and he's up there at the NPR guys, or National Public Television, I guess, giving him his what for. Made a nice little compelling movie on why they should hold out. My guess is that it's just the tip of the iceberg of content providers starting to shop around their content and getting a whole lot more money than currently Netflix, Coinstar, and the rest of these streamers, including Amazon, are willing to give. I suspect the same kind of shrinkage we saw in the margins from Apple, we're going to find in these online streamers. CBS actually just bought a streaming company just a couple of days ago. They're going to do it themselves. I suspect we're going to see other companies doing it itself. But that's pretty much. We're going to get into earnings tonight after the bell. We've got just a ton of them. I'm going to go through them just as quickly as we can. After the bell tonight, we're going to have Aflac, ALF. This thing looks range-bound. It's just filling a gap on lighter volume today. What can you say here? It did get close, but it has not tested its previous low back on high volume low on February 14th. So 48.17 on 5 million shares. Previous highs at 53.61. But not a real good view of where this thing's coming, other than the volume down the last leg was significant. Aspen Insurance Holdings, another one, AHL. This thing's getting close to its previous high on April 11th. This one could break out on decent volume, back to $37 on bad news. Assurant, AIZ, another one of these things just up here at these highs on very light volume. But again, reporting after the bell tonight. So we've got a lot of these stocks pushing 425,000 shares, going after 1 million shares from April 11th. Akamai, this one's probably going to be big, but of course we're already seeing, because of VMware's miss last night, that a lot of these companies in this space are under a little pressure. It's actually up on lighter volume. This thing's been bouncing off the 33 area. It got back in there and bounced up with just slightly lighter volume. But it's probably fairly decent support from the February 7th low, $33.55. It had 27 million shares. So look for it to go down there fairly quickly on bad news. And on good news, probably on the previous high is around $39. Allegiant Travel Corporation, ALGT. This is another one, very, very light volume at the top. I'm going to say it's too light volume to actually say much about it. I'm taking it off my list. Angie's List. This is a company that went public last year and hasn't been around that long. Went public in September, I think. Was it longer than that? May of last year. Yeah, May of last year. It had been in business for 12 or 13 years, if I remember right. Has never made money. They are basically saying that everything is wonderful and great. My guess is that we're going to see some fairly significant weakness in the future of Angie's List. They're spending a lot of money on ads to grow the company, and that's probably going to hit the bottom line in earnings. But this thing's got a big gap down here between the $14 and $16 range. I suspect we're probably going to see this thing pull back into that. American Rail Cars, ARS Group. Let me find something that looks interesting. Cake. Let them eat cake. The Cheesecake Factory actually broke above the last major trend high without much volume. This thing is kind of interesting, acting more like IBM. I suspect with this light volume, the chart's saying this thing is going to want to pull back under $36.24. It's been moving on a light volume sideways around this $38 level. Be going to be very interesting in this, but I suspect this is one that's looking more like IBM, likely pull back into $36 range. Crown Castle International, CCI, another one up here at this high with very light volume. This one looks like it could come down to the $58 to $60 range as we get into this high. They're going to have some decent news out here tonight to blow through this $75.50 high with 3 million shares from January 24th. Just not a lot of volume, and certainly a high volume low back from February 14th. This one could be a surprise to the downside. What else do we have? Cadence Designs Systems. actually testing a previous low that had higher volume at $12.57 on much lighter volume down here. Probably not a lot either way on that one. Cliffs Natural Resources, we talked about Jim Chanos being short almost all these big iron ore companies and natural resources companies. This thing just looks like it's continuing to move down. Probably going to have a much better read. This would probably be one of the earnings calls that I'll want to read the transcript of to see whether or not things are bad getting worse in China or probably bad getting a little bit better. But not a whole lot of movement back in this thing. Of course, this thing's been on a tear down, and it's been in a nice trend. If we really saw some kind of decent breakout and everybody's all wet about what's going on in China, this thing could be a nice run back up to the mid-35s. I suspect we see $1 or so later, lower after the bell tonight. What else do we have? Clearwater Paper Corporation, Kempstead Mortgage. What else do we have down here? We've got a few banks out here. Got some technology companies. The one that I'm looking at is FIO. Of course, they make digital hard drives. This one is made a lower low on lighter volume. Oop. Gotta get a new mouse, and they don't make the same trackball that I've had forever, and I'm going to probably take this one apart and try to fix it one more time. I get my little file out here, but I've worn this thing down. It's been a wonderful and trusty one. You can get the same kind, but it is not wired. I don't like those wireless keyboards. They seem to always fail when I need them just the most. Anyway, Fusion IO, nice little bounce, a little bit of juice yesterday. We had 4.5 million shares. It's going to be looking at the 1780 and gap back above it up here. Not a bad-looking chart, actually, but probably just in the wrong place at the wrong time. We'll see what they do. But not a good indicator of probably a lot going on in the marketplaces. What we have, again, is a Jarden out here. So on the heels of the cake business, let them eat cake. We've got another one that's been floating up here on extremely light volume, JAH. This, of course, all these stocks after the bell tonight. This is one that could break very hard either way. My guess is maybe $2 higher, and on a disappointing note, you're probably headed back down to the $38.20 low from February 14th. What else do we have out here? PMC. The big Mac Daddy that's probably going to move the NASDAQ tonight is Qualcomm. It's Qualcomm. Qualcomm. Those haven't been around the market forever. The CNBC used to play this echoey Qualcomm every time someone brought it up because it was kind of like Apple today. The thing was brought up every 5 minutes on CNBC around 2000. Of course, it was printing off almost $200 New Year's Day in 2000 and was down to, $124 within a couple of 3 or 4 days after the beginning of the year. This thing has, of course, never gotten back to those lofty levels. Still a good company, so I'm not going to be shorting this thing. But we could see some very interesting movement in this as more people get involved in this business. Of course, Intel is going to be going after them very shortly and getting up in their grill, as they say these days. Up in your grill! So look for Qualcomm to see what they're saying about margins. We'll talk about this when we come back.
Are
you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Wow, I ended my sneezing fit just in time to come back. But I don't know, I have a ceiling fan on here, and it just kind of got to me a little bit. But so we had a question in the end about DZA. Certainly looks like you're going to get one more retest down here of the $36.44 area, and it's going to be interesting. Boy, you certainly have a lot of volume and volatility back here. This really does look like it is setting up for a nice move. But I think we're probably going to get one more jab down in this mid $36 range Might not make it all the way down. The 8 million shares probably fairly good. He had more energy yesterday with 16 million shares in this thing. But certainly looks like we're going to get back into that. You get nice lighter volume, maybe a blowout, and might be setting up. Anyway, we're talking about Qualcomm when we left. Of course, the big Mac Daddy, I suspect there's a lot of can I say this? Get it back up here. A lot of everything already built into the stock. It has, of course, made not a much lighter low down here at the $63 area, the March 18th low and your April 19th low. This thing has made so far two lower highs. I suspect we're probably going to come back and try to get this thing back into the 63, 62 area again. Maybe they'll come out with some huge forecasts, but I think a lot of all the cell phone business is already baked into the cake of this. Now, probably the last quarter of the year, that new cell phone from Apple in China could be ready, and that new chip could bring them a lot of business. I just don't think that there's a lot between now and there that's going to physically change the amount of phones being sold. And a great deal of phones are being resold as Americans buy the latest iPhone and resell their older phone, finding a home in the rest of the world. Of course, other stocks after the bell is Ryland Group. This thing, of course, is made a slightly lower high, about 16 cents lighter on March 25th compared to the January 30th high. And, higher lows, lower highs. This thing is probably going to be consolidating somewhere around here. I can't believe that no matter what they said, if they said there was an asteroid that was going to come and destroy the United States tomorrow, someone would say we've got to buy Ryland because they'll have 2 or more houses closing tomorrow. I think we need a little time out in the stock and the whole sector, and probably going to see a bit of a pullback in this. When we look at the numbers, if they have anything to do with the underlying numbers that have been reported, I suspect this thing could get back into the $30 range and set up the next move higher in the market. But there's still a nice little low out here from November 15th of last year. I think the shakeout would probably take this back to that level, and I might be actually interested in buying it back down there. We've got some other tech companies tonight. Western Digital will be another one. This one's hanging out here at these highs. Of course, the computer business in the dumps, but with everybody using cloud services, this one is hanging out right here at the highs. Probably going to have a huge move in this one way or the other. Bad numbers, and we're probably back down to the 48s on it. So you all have a great and safe night. I'll be giving Tom O'Brien as much help as I can in the den for earnings tonight, so make sure to listen to him between 4 and 6. You all have a great and wonderful evening.